Hello, and in our market update this quarter, we're recommending to our clients, due to the increased levels of price inflation, to plan ahead, look to secure the supply chain and materials early, and with increased levels of visibility. In this market update, I will be providing a macro overview of the market, and I will be talking about supply chain disruption and our recommendation for mitigating risks. Ange will cover construction PMI prospects for output. Kerry will follow up with the ongoing impact of the energy crisis and how the desperate situation in Ukraine is impacting construction costs. And then finally, we'll round off with a focus on the facade industry. In the last quarter, we've seen inflation hit a 40-year high, levels of which many of us have never seen. With businesses continuing to pass on cost increases and spending remaining at higher levels, the Bank of England has been forced to react by increasing interest rates to 1.75%. Despite this, UK construction output reached another record high in the second quarter of this year, with demands forecasted to remain positive for the remainder of the year. What an incredible amount of disruption our supply chain has weathered over the last 18 months. We're really fortunate that they've actually remained very resilient, and those pressures are starting to ease, albeit that is on the backdrop of the current global political issues we are facing. Ange and Kerry will now take you through the key findings from our survey data.
Thanks, Rob. Despite the high inflationary pressures which you mentioned there, we've seen a really strong growth in jobs, and construction companies are actually seeking to boost their capacity to meet ever-growing new order rates. And this aligns with our data, as we saw UK construction output grow significantly in the last quarter, with London output alone hitting 9.3%. And infrastructure and private housing are doing particularly well. What's really interesting here is that National Construction UK PMI, which monitors overall construction activity, slightly contradicts that. And we saw this dip behind the no change baseline, which indicates a slight contraction for the first time since January 21.
Now, construction vacancies are down from their recent peaks, but are still at historically high levels due to a shortage of available candidates. Now, our data suggests that labour resource requirements remain a challenge if we're to start to meet the greater workloads and forthcoming project starts. Now let's turn our attention to the energy price rises. We are all aware of the well-publicised energy crisis and the increasing impact this has had on project pipelines and supply chains. And we're now discussing the possible threat of gas rationing across Europe following Russia's shut-off of supply. Now, high energy costs have forced manufacturers, particularly of energy-intensive and heavy-side materials, to add surcharges and make multiple unscheduled price increases. Now, on a positive note, a recent reduction in commodity prices has shown that at least one significant source of inflationary pressure may be starting to ease.
In our market update this quarter, we surveyed facade contractors, and they all reported really strong demand, the majority having secured 95% of their 2022 workloads, and their order books are remaining healthy for at least the next couple of years. Plus, labour's moving much more regularly between employers, and this is leading to increased wage fluctuations. These pressures do present a challenge. However, to mitigate against these risks, we're seeing contractors enter into long-term agreements, as well as encouraging early engagement. And for the first time, we're seeing negotiated tenders utilised much more frequently than ever.
Our message to our clients is clear. Plan ahead, secure supply chain and materials early, and increase levels of visibility.
Follow our channels to keep up to date, or get in touch to speak to one of our market experts today.